QuantumScape Corporation is trading right now at $9.17 per share, showing a solid jump of 4.86% so far in today's session, Wednesday, May 13, 2026. This intraday movement is catching quite a few eyes because while the broader market is wrestling with a few mixed signals, QuantumScape seems to be finding its footing on some fresh technical momentum. Most people looking at QuantumScape see a company that has been promising a massive shift in battery technology for years without actually putting a product in a car you can buy. The common belief is that they are just another research project with a big valuation. But here is the reality that is starting to set in for institutional players. They aren't just in the lab anymore. The recent inauguration of their Eagle line for pilot production means they are finally moving into the make or break phase of manufacturing. This isn't just about whether the science works. We know the science works. It's now about whether they can build these things at a scale and cost that makes sense for Volkswagen and the rest of the industry. That is the curiosity loop the market is currently stuck in. Can they actually manufacture at scale? When you look at the recent trading volume, it's clear that something is shifting. We're seeing about 32 million shares move today, which is significantly higher than the 20 million average we usually see. This suggests that the big players, the institutional desks and wealth management groups, are starting to reevaluate their positions. If you're using self-investing tools or managing an individual brokerage account, you've likely noticed that the volatility in QuantumScape has been intense over the last year, swinging from a low of $3.80 to highs over $19. This is a stock that rewards the patient but punishes the impulsive. The story for QuantumScape has always been about the solid-state lithium metal battery. If you're looking for investment help or exploring investing sites to understand why this matters, it comes down to density and safety. Current batteries use a liquid electrolyte, which is flammable and takes up a lot of space. QuantumScape uses a solid ceramic separator. This allows them to use a lithium metal anode, which is basically the holy grail of battery tech. It's lighter and holds way more power. Their recent QSE-5 prototype is hitting energy densities that would make current high-end EVs look like old technology. We're talking about 844 watt-hours per liter. Comment below how many shares of QuantumScape you currently hold, and let me know if you think the Volkswagen partnership is enough to keep them ahead of the competition. The expectation from the market is that QuantumScape is still years away from revenue. The reality is that their partnership with PowerCo, which is VW's battery arm, has shifted into a volume production agreement. They are targeting 40 gigawatt-hours of capacity per year. That is massive. It moves them from a science experiment to a legitimate industrial supplier. This is why you see the stock reacting so sharply to any news regarding their production lines. When they announced the Eagle line was up and running in San Jose, the market didn't just see a factory. It saw the first real evidence that the transition from lab to road is actually happening. For those of you using the Fidelity mobile app or checking your SoFi trading platform, you'll see that the analyst sentiment is still quite divided. Some see a clear path to $20, while others are worried about the cash burn. QuantumScape reported its first quarter 2026 results recently, and while they are still losing money, about 18 cents per share, the market was more focused on their liquidity. They still have a healthy cash pile, which is paramount when you're building out high-tech manufacturing. They recently added experts like Ross Niebergall and Dr. Mark Mayberry to their boards, which signals a pivot toward the technical and defense-related applications of their tech. The broader macroeconomic environment is also playing a huge role here. With interest rates finally showing some stability, high-growth, pre-revenue companies like QuantumScape are becoming more attractive to investors who were previously hiding in safer assets. If you're doing online investing through Interactive Brokers or Robinhood, you know that the risk-on sentiment is starting to return to the tech sector. QuantumScape is often the poster child for this. When people feel brave, they buy QS. When they are scared, they sell it. Let's look at the business model for a second. They aren't trying to build cars. They are trying to be the Intel inside of the EV world. By focusing on the battery cell itself, they avoid the massive overhead of vehicle assembly while capturing the most valuable part of the EV supply chain. This is a high-margin play if they can get the yields right. The challenge with solid state has always been the manufacturing dendrites, tiny cracks that form during charging. QuantumScape's ceramic material is designed to stop those cracks from growing. If their test cycles continue to show 95% energy retention after 1,000 cycles, they've solved the biggest problem in the industry. Expectations were that 2025 would be a quiet year for them, but instead it was filled with board changes and pilot line milestones. The reality for 2026 is that this is the year of the B sample. These are the samples that go to the car companies for real-world testing. If those tests come back positive, the floodgates will open. You'll see every major automaker trying to get a piece of their capacity. This is why keeping an eye on institutional activity is so important. When you see massive blocks of shares being bought through Fidelity Brokerage or Interactive Brokers trading, it usually means the big money is getting a whiff of something good in the testing data. Investment sites often talk about the valley of death for startups, the gap between a working prototype and mass production. QuantumScape is right in the middle of that valley. They have the bridge, which is the Volkswagen money and technical support, but they still have to walk across it.
Their recent results show they are managing their capital well, but the clock is ticking. Every quarter that passes without a delay in their production timeline is a massive win for the bulls. So where does this go next? The tension between the skeptics who call it a science project and the believers who see a trillion-dollar opportunity is what creates the volatility we see today. If you're self-investing, you have to decide if you believe in the ceramic separator technology or if a competitor like Solid Power or even Tesla stock's internal projects will get there first. Tesla is always the elephant in the room. While they are focusing on the 4680 cells, QuantumScape is aiming for a completely different chemistry that could theoretically leapfrog what Tesla is doing today. The reality of the situation is that the world is moving toward electrification regardless of the short-term political or economic noise. The demand for better batteries is bottomless. QuantumScape doesn't need to capture 100% of the market to be a massive success. They just need to prove that their cells can be made reliably and that they actually provide the range boost they've promised. A car that goes 500 miles on a 15-minute charge changes everything. It ends range anxiety and makes the gas engine truly obsolete. As we move toward the back half of 2026, the catalysts to watch are very specific. First, the feedback from the B-sample testing with automotive partners. If we get a press release saying a major OEM has validated the QSE5 performance in a test vehicle, the expectations will shift overnight. Second, keep an eye on the yield rates from the Eagle line. If they can show they are producing these cells with low waste, the financial model starts to look very different. If you're looking for investment help, the best advice is usually to watch the technicals alongside the fundamentals. Today's 4.86% move pushed the stock above some key moving averages that have been acting as resistance for months. If it can hold these levels, we might see a run back toward those double-digit prices. For those managing portfolios through Schwab Intelligent Portfolios or other automated tools, you might see the algorithm starting to pick up on this trend. QuantumScape's story is one of high stakes and even higher rewards. The company has spent over a decade and billions of dollars on a single ceramic material. It is the ultimate all-in bet on a specific scientific breakthrough. If they succeed, they become one of the most important companies in the global economy. If they fail, they're a footnote in the history of the energy transition. That is the reality that every investor in QS has to accept. To wrap this up, the expectation was a slow, quiet climb for QuantumScape. The reality today is a sharp, volume-backed move that suggests the market is starting to price in a higher probability of success. We've seen the price hit $9.17 with strong intraday momentum. We've seen the manufacturing milestones, and we've seen the big name additions to the leadership team. Whether you're using the Robinhood app for quick trades or Fidelity Wealth Management for a long-term plan, the evidence is mounting that QuantumScape is no longer just a research firm. They are becoming a manufacturer. The contrast between what people think they know and what is actually happening on the factory floor in San Jose is where the opportunity lies. Always keep that tension in mind. Authority in the market doesn't come from following the crowd. It comes from seeing the shift before it becomes obvious. QuantumScape is right on the edge of that shift. Whether it's a leap forward or a stumble remains to be seen. But for now, the momentum is clearly on the side of the believers. Stay sharp, watch the volume, and keep your eyes on those production updates. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.